Welcome, my name is Eric Martineau, and this is part 2 of a 2-part series about private equity banking and the benefits thereof. In part 1, I spoke about what were the generic benefits of private equity banking. In this part 2, I'm going to show you how to use the basic principles of private equity banking using real case studies. Here are the 6 benefits of private equity banking. First, tax-free growth and tax-free use of your money for life. 2, guaranteed returns with 0 market risk. 3, liquid cash. You don't have to wait until you're old and gray to get at your cash. You can get it anytime you want. The 4th benefit of private equity banking is protection, both from creditors and lawsuits, as well as unpredictable economic events, those ups and downs in the market that none of us control. The 5th, compounded interest. Our money grows. Compounded interest coupled with tax-free growth is a fabulous tool. And then there's arbitrage, the 6th component. Very, very powerful. The ability to have our money working for us in 2 places simultaneously. Can't get that anywhere else, and tax-free. So I'm going to show you how you can utilize this arbitrage to increase your investment. In part 1, I stated that private equity banking is not an investment, it's a tool. I took part 1 and I sent that off to 2 of my mentors, 2 men in this industry that I really look up to. And one of them called me back and he said, look, Eric, private equity banking, it's the best investment that there is. You just have to use it properly. So he calls it an investment. The second one emailed me and he said, I do consider private equity banking an investment. But it's even better. It's a guaranteed investment. Then he added, but it's a tool as well. Well, I'm going to stick to my guns. I still think that it is a tool, but I'm going to change that to toolkit instead. Let me give an example. A couple years back on Black Friday, I went to Home Depot. I know, don't go to Home Depot on Black Friday. You're going to spend a couple $1,000. And they had this tool set there, right? I could buy all of these tools. Well, I needed both of the saws and I liked both of the drills. And I was like, cool. I didn't know what that last thing was. I'd never seen one of these before. In fact, I don't even to this day know what you call that thing, right? It didn't have the blade connected to it. 2 years later, I go to visit a friend of mine who is remodeling a hotel. And he's got one of these things and he's cutting through drywall and he hits a 2x4 and he just keeps going through it, hits a nail in the 2x4 and just cuts through it like butter. I'm like, that is a cool tool. I need one of those. And I started thinking, wait a minute, I got one of those. As I've thought about some of the people that I've helped get into private equity banking, it's dawned on me that we made it for one specific usage, but I've not expanded that to help people understand other ways that they could use this tool. And so I'm afraid that some of the people that have this tool bag that I've handed them don't understand all of the ways of utilizing a private equity banking account. So I'm going to do that for you today. In Tony Robbins' book, Money, Master the Game, listen right here. Tony Robbins says, I had an immediate aversion to the words life insurance. Like most, I'd been sold retail life insurance and I wasn't going to be taken again. And then his attorney said to him, Tony, this is not your typical retail life insurance. You can't just buy this off the shelf. Think of this as an insurance wrapper to place around your investments. You see, his attorney thinks like I do. This is a toolkit. Private equity banking is a toolkit, a number of tools that you can use to improve or enhance your investments. So I'm going to change my definition from part 1 to part 2. Private equity banking is not an investment. It's a toolkit to enhance and improve your investments. Problem is, like you know, there's no user's manual. Why is that? Remember what Tony Robbins' attorney just said. She said, you can't just buy this off the shelf. Each policy is crafted around your goals, your finances, and your health. That's pretty private, isn't it? So what ends up happening at the end of these things is I have a fiduciary responsibility to make sure that I keep your goals, your finances, and your health private. And so I've built a lot of these things and I've crafted them around a person's goals, their finances, and their health, but I don't go running around showing people. It's not like as if I sold a solar system to somebody and I can say to the Joneses, hey, look, I just got that for the Smiths. Look at that. I can't do that. So in making this how to use portion in part 2, I'm going to change the names, but I'm going to keep the prospectuses the same. So I'll show you real live illustrations, but please understand, I'm changing the names, not the numbers, to protect those that I've worked with in the past, again, so that their goals, their finances, and their health are not compromised by me by showing you how these folks have utilized these tools. But I hope at the same time, you'll be able to look at it. So let's call this Other People's User's Manual, right? But again, it's changed. Now, in grabbing other people's, let's say I'm using $20,000 as an example. You might be thinking, $20,000? Are you crazy, Eric? I don't get out of bed for $200,000. Why don't you show me examples with $2 million? Or you might be thinking, $20,000? Are you crazy? I could barely do $2,000. Let's do $200,000. I don't care where you're at. If you need to add 2 zeros or subtract 2 zeros from my examples, please understand the examples and the ideas will work whether you add a 0 or subtract a 0 for your financial situation. It's the concepts I want you to see on how to utilize the tools of private equity bank. So what I want to accomplish today is to show you how to get out of bad debt while still utilizing other people's money wisely. 2, how private equity banking can help you outperform the stock market with 0 risk. 3, how you can pay off structured loans with non-structured loans and lower your interest rates. I'm also a loan officer. A structured loan is what I give people anytime they want to buy a home. You have to make that payment on the first of each month. It's a structured loan. But inside of a private equity banking policy, even though you can borrow and use your cash value as collateral, what you borrow from the general fund of the insurance company is a non-structured loan. You never have to pay it back if you don't want to. If you want to make 3 payments in a month, make 3 payments in a month. If you want to make no payments in a month, don't make any payments. That's what I'm talking about. Again, very powerful tool when utilizing private equity banking. The next one, protect your business and your business's assets from the unpredictable and the uncontrollable. Let that sink in. You can get real estate, vehicles, equipment, it doesn't matter. And by owning them, but owning them through your private equity banking account, guess what? They are now protected from the unpredictable and the uncontrollable. I'm going to talk about this one at length. Don't pay cash and drop your savings to 0. Combine lost opportunity cost, which is what happens when we spend our money down to 0. That money is gone forever. We can't use it again. We're going to combine lost opportunity cost with arbitrage. So we have 2 pots of money, one that's always growing and one that we can use to leverage in other investments that as we pay it down, this one has kept growing. Okay? So we're going to use our money twice. Invest in real estate and receive higher rates of return and less risk. I'm a real estate guy. As I said, Diane and I owned 16 rental properties at one point in our life. That was going to be our retirement. And because I didn't have a private equity banking account, I lost all of that. Okay? So I'm going to show you how to invest in real estate, get higher rates of return, and have less risk. Invest in businesses or new businesses. If you're an entrepreneurial person, how to invest in new businesses and get higher rates of return with less risk. Also, build a predetermined, tax-free retirement income for you. A lot of people think life insurance is like, well, I can't use it during my life. It's only good for my family in the future. Not the case with private equity banking. Remember, you can get back to that cash anytime you need it. So if you want to tell me how you want your retirement income to look like. Eric, I want to take $70,000 out. I want to get to age 65, and at that point, I want $75,000. I want $135,000. I want $25,000. Again, the numbers don't matter. You can build a predetermined, tax-free retirement income using private equity banking and still have access to that money between now and then. And then lastly, build a predetermined, tax-free legacy for your heirs. You tell me, Eric, I want to have $5 million or $25 million or $50,000. Again, the numbers don't matter. You tell me how much you want to leave to your heirs, and we can build something so that at age 75 or whatever, you're there. You've got that money and you know it's going to your family. I want to give you a user's manual for all the tools that are available for those of us that have private equity banking accounts. This is one of my favorite tools in the toolbox. Don't pay cash and go to zero with your funds, right? Your savings. Combine lost opportunity cost with arbitrage. Use your money twice. Now, a couple weeks ago, a friend of mine said, I don't need private equity banking. I can use cash. When I usually hear this, it comes from the Dave Ramsey types. But this gentleman that said it, he actually can pay cash for everything he needs. And in his mind, why would I need to borrow for myself if I can pay cash, right? Well, let me show you. From the book, Pirates of Manhattan. Private equity banking. Banking is the key word. And as Barry Dyke says, money must reside someplace, right? If this guy says he can use cash to buy his toys, where's his money? Money must reside somewhere. When viewed in this light, of all the alternatives, permanent cash value life insurance is perhaps the safest and the most economically efficient holding tank, banking account, of cash savings within America today. So here's my question for my friend. Where is that cash not warehoused just before you invest it? You're going to pay cash for that boat. You're going to pay cash for that car. You're going to pay cash for that airplane. Whatever that toy is you're buying, where is that money not warehoused just before you invest it? Where did this come up from? 2 nights ago, Diane and I were having dinner, and she said to me, honey, I got to show you this house one of my realtor partners found. It was on the market a couple years ago for $380,000, and today we could buy it for $250,000. It's distressed. They want their money. That realtor tells you about a killer property, and you need to be able to go offer those distressed people $250,000 right now. So you got to have cash available to you, right? Again, the question, where is that cash not warehoused just before you invest it? Well, my money's in the stock market. Probably not, because it's too volatile and too risky. Okay? What about a 401k or an IRA? No, it's not there either if you're younger, because you can't get at it and there's restrictions to going and get it. Well, is it in a CD? Probably not. Why? Because of time constraints and contractual obligations with a CD. So where is that money? Probably sitting, if you've got enough just sitting there to go throw down $250,000. A savings account. And how much is it earning? 0%. But Eric, it's liquid. Guess what? Your money's liquid with a private equity banking account too. It's just earning a heck of a lot more than 0%. So I don't care where you get the money. Like I said, I'm going to share some examples. So here's one for Hugh Jackman. He's just 15 years younger. And he's throwing in $2,000 a month. Because maybe you're thinking, well, how would I get $250,000, right? Well, if he puts in $2,000 a month over 10 years, he'll have $266,000, more than enough to go throw that $250,000 down in the real example my wife gave me this week. All right? That's how you can do it. That can only afford a smaller amount can still get into that. Let's discuss the typical banking methods for buying real estate. As real estate investors, you'll hear us talk about cash on cash return or OPM, other people's money, cash flow, and appreciation. And every time, and this is the key point, every time, whether you pay off a note or you save up and then buy, each time you do that, the key is that you go to zero. Cash is only used once. Thus, when we use cash, the opportunity cost for that cash is gone. You've used it here, you can never use that money again. It's gone. When we couple this with the wealth creator mindset, notice that we have cash value sitting in our cash accumulation account. We've got the insurance company that will give us a loan. So there's 2 pots of money there. My cash value accumulation account, which continues to grow always, and then when I want to borrow money, I don't take it out of my cash value account. I leave it sitting in my cash value account, which is still growing at compounded interest, but I'm borrowing against that, using it as collateral, and I take the money out of the general fund of the insurance company. So I have 2 pots of money. One that will continually grow, and the other which I can borrow and pay back. But this one never, ever, ever. Once you put the money in there, it will never go away. And so this becomes the power when you're talking about buying real estate, is that the portion of my cash value will continue to grow. Now that doesn't mean that I don't have to or can't utilize a traditional mortgage along with it. Think about an investor again. An investor usually puts down 20%. Okay? Borrow that 20% from your cash value from the insurance company and then use that as the down payment and then get a regular mortgage company to give you the other 80%. Now you're 100% leveraged, even though the mortgage company really thinks you're 80% leveraged, and it continues to grow. And then toward the end of your life, remember that cash value is a subset of death benefit, and it always will be smaller than your death benefit. So basically when you die, you're going to have 3 to 20x, depending on at what point you die in your health, but probably somewhere between 3 and 20x more value in death benefit than you have in cash value to leave to your heirs. Think about that. You can buy all those toys. Remember that friend of mine that said, well, I can buy cash? Great. Shove it into your cash value accumulation before you buy that car, then go buy the car. Now the same amount of money that you just spent on that new car is inside of a cash accumulation account. Want to go buy a boat? Shove it through your cash accumulation account first, borrow it out of there, and that increases your death benefit or the generational wealth that you want to give to your family. Need to buy a plane? Shove more in there. Open up more policies if yours can't fit it. Get one on your wife, your kids, your business partners. Fill that thing up as big as you can and use it for every single major purchase you do. And at the end of your life, your death benefit is going to be 3 to 20x larger than all the spending on toys you've done throughout your life. And it comes back to your heirs tax-free. Back to what I said. I'm going to show you today how to build a predetermined, tax-free legacy for your heirs. And that's how you do it. Who'd have thunk it, right? You're going to buy all these toys throughout your life, and then the value, add up the sum of all those toys, and at the end of your life, your family's going to get 3 to 20x more in generational wealth passed on to them tax-free for all the toys you put through that account. A friend of mine said to me, well, I only planned on putting into this once and then just letting it sit there. And I thought, I haven't explained this well enough, buddy, because the more you put in, at the end of it, you still have access to it. You can still use it. You can still go buy the same toys, but at the end of your life, all of that sum of all those toys will go into 3 to 20x more in death benefit for his family. So if I were making the kind of money that gentleman's making, I'd be buying, like I said, policies on my wife and my kids and any business partner I could, and I'd be shoving as much money through those as I could. That's just me. Folks, this is what private equity banking can do for you. We've gone over many of the tools. 1, get out of debt while using other people's money wisely. 2, outperform the stock market with 0 risk. 3, pay off structured loans with non-structured loans and lower your interest rates. 4, protect your business and your business's assets from an unpredictable and uncontrollable events. Your real estate, your vehicles, your boats, your cars, your planes, your equipment, all of it. We've also shown how not to go and use cash and take your cash away and lose your opportunity cost. Use arbitrage instead. Use your money twice. Very powerful. Invest in real estate with higher rates of return and lower risk. You can also invest in businesses and new businesses and get higher rates of return with less risk. This is probably the most important, well, next to the most important, I guess. Build a predetermined, tax-free retirement income for you. I know a lot of people think insurance is for once you die. You just saw 2 examples where these people were able to build a predetermined, tax-free retirement income. And then also build a predetermined, tax-free legacy for your heirs. This is what you get with private equity banking. I look forward to helping you. Get a hold of me, let me show you, let me craft with you something that fits your goals, your finances, and your health so that you and your family can take advantage of private equity banking. I look forward to helping you. Thanks.